Let's take stock of another set. We have Anuj Kumar, CMD and MD, CEO and MD, I beg your pardon, of CAMS joining in on the show. Anuj, hi, morning. Good to have you on the show. You've delivered a strong performance in the first quarter, and clearly the capital market flows helped there, I guess. You've also guided for long-term base growth of about 15%. Given the market volatility and the sheer nature of the beast, do you think you'll stick by with your guidance, or you think the guidance can be upped as well?
Hi, good morning, and thanks for having me on the show. Like you said, the first quarter has come out sustained and strong in terms of financial results. MF was expected to grow. It's grown about 27%, riding on assets which grew 35%. I think the great occurrence which is happening is that non-MF portfolio has grown 31% revenue. So blended, we are at about 27% overall revenue growth, which is a very heartening thing. All this has been done efficiently because you would have seen that revenue growth of 27% has led to EBITDA growth of 36 plus, and PAT has grown 42%. We've become more efficient in terms of both EBITDA and PAT delivery. So overall, we've run the operations more efficiently. If you see just the MF performance, I think just significant lifetime high or records in terms of core metrics. Overall assets grew 35%. Equity grew a staggering 55%. A lot of that is mark to market, but if you see the operating metrics, I think we had a great share in equity net flows. That's perhaps the formative metric in the market, most foundational. We had almost a 70% share of equity net flows at over 90,000 crore. We had a record number of SIPs come in at about 93 lakh, almost a lakh a day is the count of fresh SIPs being registered by CAM service funds. And then again, when you see new fund offerings, we got over 20,000 crore collection during the quarter. Again, a staggering 80% plus market share. So all I would say is that we can't take cyclicity out of the markets. They will remain. Our business is kind of joined at the hip with the capital markets. But long term, you know that investors are just putting their hands on the option of investing into capital markets and equity through mutual funds. I don't think all of that is going away anyway.
Margins have dipped sequentially due to pressure on yields. How is the margin outlook as Street expects operating leverage will play out for the company?
So Nikunj, the operating leverage has played out in the past at about 1% a year. We expect the same thing to hold. You would also see that these financial results are despite the fact that we eat most of the employee cost expansion in the first quarter. So we've taken all that cost in the books and we've still posted 45% plus. At some time during the year, you will again, or you should likely see this cross 46. And I think we're happy with about a 1.25 margin expansion every year. We believe it's likely to happen this year too.
Okay. The performance of the non-mutual fund business has been strong on a year-on-year basis. What kind of growth guidance would you give us and expect contribution revenue to come from this segment in coming years?
So we had stated publicly that non-MF will grow faster than MF. Non-MF should grow in excess of 20%. For the quarter, it's 31%. I'll just take you through the components because some of this growth is very exciting because the formative elements are all in place. Our KRA business grew over 100% in revenue year on year, riding on our entry into servicing, demat accounts and brokerages. It was largely an MF play. MF has grown, but the other entry has kind of broadened out the revenue growth. So that's an exciting story. In payments, we grew revenue 44%. We've come out as one of the top 3 in the country on UPI autopay. And UPI autopay now, against the conventional NACH is being preferred by investors and principals. So we grew revenue 44%. And both of these, our belief is that the steam is still left and we could see similar growth for the rest of the year. In account aggregator, while the absolute revenue size is small, I think the gratifying thing is that we've expanded our share of the market. The individuals linked to a CAMS-led consent to 16%. We were about 2 to 3% about 2 years back. So those 3 are strong stories in terms of percentage revenue growth. I think in In account aggregator, in insurance, it is still slower, which means that the acceptance of the product in terms of e-insurance has gone up. At least in the quarter, we saw over 1 million electronic policies being added, over 1 million EIA accounts, and we had never seen this in the past, but the revenue play is still remaining. And in alternatives, we grew about mid-teens. Our expectation is to grow upwards of 20%. There were some fall-offs in old contracts because of which we could not grow about 20%. So it's a broad multi-product story which is playing out, and I believe there is steam left for us to definitely grow over 20%, perhaps 25% in the year on non-MF.
Right, morning. The recent announcement as well for tightening of the F&O rules were made by SEBI. Is there any sort of an impact that you're expecting?
Perhaps a marginal impact. We play in the market where F&O accounts are verified every year by brokerages through the account aggregator setup. That's a small revenue contribution. And if F&O, natively becomes unpopular or less popular, then there are perhaps fewer people opening those accounts, and it may have a small marginal impact on the KRA business. Altogether, this will not add up to 1% on our overall revenue. So it is not material, but I just thought I'll mention it because there is a small impact.
Crossed 40 lakh crore AUM milestone, registering a growth of 35%, and the SIP book also crossed 5 crore mark. How many SIP registrations do you expect in coming months?
So the SIP registration volumes post-COVID at CAMPS level used to be 10 lakh a month, grew to 20, have crossed 30 lakh now. You're also hearing that there's an initiative to broad base this further and take it to the bottom of the pyramid to start booking 250 rupee SIPs. Even if that does not happen, I'll keep that off the table for the current argument. We believe that this about 80 to 90 lakh number of SIPs being registered every quarter is a possibility and should continue to play out. If we start doing the small value SIP, this number could be even higher.
Okay. If micro SIPs are introduced, would you actually make money on them, or that is a good to have business but not a great business for shareholders?
Initially, I would say that since we eat off the same plate, we have offered to the industry that we will subsidize it. So you're right, in the initial, maybe the first and second year, it will be just an investment from our side. However, just look at the stickiness of the product and the fact that every person's income is scaling. So it's a good investment for us to make upfront for the first year or two, and then find that the same investor will scale and add more and more money. So upfront, a bit of a subsidy. Over a long term, just sticky and sensible business to do.
Appreciate your time. Thank you for joining in and sharing with us your outlook on CAMS and what the business growth metrics are down the line. A quick check-in as to what the market is up to, and down 430 points as we speak for the Sensex, 79,500 levels. It's of course a steeper cut for the broader universe, with a whole host of names buckling under pressure. When it comes to the Nifty 50, just a handful of stocks in the green, with the big drags being led by Tata Motors, Tata Steel, ONGC, as well as Hindalco.